Hello again, everyone. This is Joe Hentges with Beyond the Chart. And in this technical analysis of the stock market video, we're going to take a look at the Dow Industrials on a daily basis, the high-low indicator that I keep and talk about every day with my insider members, three key ETFs, semiconductors, financials, and Nasdaq Biotech, and then one stock from each one of those key ETFs. So stay tuned. All right, let's start off here with the Dow Industrials. You can see the Dow for the week was not up that much. Let's see, 821, about 180 points or so. Most of that, if not all of that, and then we gave some of it back, came on Wednesday with the big 300 plus point move. Now, the interesting thing, I've got the note right here on the screen, is the Investors Intelligence Advisory Survey percent bullish is at a 30-year high, and that's really interesting. So 30 years, that's back to January 1987. That's the same time frame for the last time that we had anything that exceeded the 12 up days in a row that we had on the Dow Industrials. And that was 13 of those in a row back in January of 1987. It turns out that there's actually only one other time with a longer time frame also, and that's 14 days back in June of 1897. So in the 121-year history of the Dow Industrials, there's only been two other times in 121 years. Hope I got that number right. I think it's 121, yeah. Only two other times where there was a streak longer than the streak we just had in January. So there's definitely the bullish enthusiasm that's in place and at this point, and that's reflected by the survey. Percent bullish is reflected by the price activity, what's going on. These days I've got on here on the screen here is just simply, I wanted to make a note to myself of how many days long the corrective activity has taken in this wave move up, this fifth wave up from the February low. You know, minor wave 2 took 47 days. Pretty long minute wave 2 pullback in here. Kind of a long drawn out. That, of course, that's when the election was going on as we moved into the fall. And then we had a very short one here with minute wave 4. Now, we're getting very, very close, I believe, to the end here. Either that high on Wednesday was it. We'll find out soon enough if the market starts to roll on over and break below here, or it could continue to push up a little bit higher. Some of my Fibonacci projections stretch up to 21,400, which would be another 400 points above Friday's close. We'll see whether or not it continues to push or not. So that's the picture on the Dow Industrials. The high-low on the New York Stock Exchange, this is just one of the indicators I look at. We've had a couple of high peaks in here. Of course, we had this reading on Wednesday with the big move. 333 more new highs than new lows on the New York Stock Exchange. And all of a sudden on Friday, we only have 35. And 35, there's only been one other time this year since 1st of January that was lower than that. And that was back on January 30th when we had a pullback. So it's going to be interesting. For the most part, this market has stayed above the zero line except for a couple little blips with the high-low index. But you can see how negative it can get when it wants to start the selling, like December, January, and February last year. All right, let's take a look at the semiconductors. This is one we've been looking at every week, and this just continues to trend. I think the thing I really noticed here was, look how tight the compression is on the trading range. This is for the week, okay? This is the weekly chart. It was up a whopping 14 cents for the week. Now, the last time I saw a range this tight, I went back and just kind of looked at all of this data in here. It was back in here, back in September of last fall. Week ending September 2nd was when we had equal to this. Nothing else was tighter than this. So compression leads to expansion, so I wouldn't be surprised to see some kind of a move coming here. Let's take a look at analog devices. This is one of the holdings in the SMH ETF, trending up very nicely, nice and strong, and it just keeps stair-stepping its way up. The thing I'd just point out here is all three of my indicators are now showing bearish divergence in here on this move, this last little leg up in here. All three of them are showing bearish divergence. So we could be right at that point where this is getting ready to roll on over and start to pull back. Now, if this is in sync with the Dow and everything else, then we're going to get a pullback and then one more move to the upside. But the Nasdaq seems to be a little bit ahead of the Dow and the S&P 500. So I'm a little bit wary about that. It seems like the Nasdaq stocks are more advanced in the wave count. I want to take a look at the biotech next. The IBB, Nasdaq Biotech. Look at this. This is back to January, February. This is the trading range it's been in for the entire year. And I drew a red line across the top here where the highest close, and the same thing at the bottom with the lowest close. And for the most part, it's been bouncing back and forth between there. Got a little compression in here with the symmetrical triangle, and now we broke up here. This week, here's Wednesday, we got to close above 300. Okay, a little doji candle. Then a potential, let me zoom in, a potential reversal bar on Thursday, but we didn't get a close below it. Got a nice little bullish candle back above it again, because where did it close on Thursday? 299.79, so back just a little bit below 300. Now we got this bullish move back up here again. I'm a little wary of this because I'm seeing some divergence on this move. Now, there's no guarantee the divergence is going to hold, but all three of my indicators are showing some divergence between this move right in here. So that's the picture on the Nasdaq Biotech. Let's take a look at Celgene. And Celgene is one of the holdings. Now, it's interesting that, let me zoom out of this a little bit so you get the same picture back to January, February. Okay, so this is just like what IBB is doing, except this high here was similar to the high that IBB had, but IBB rallied back up to a high in this point. Celgene did not, and then Celgene broke above this very solidly, then went into this compressed triangle like IBB did, but at a higher level. So it looks like it's trying to push its way up. Now it's getting, and it ran into resistance with that move on Wednesday. Ran into the resistance here at this point, about very close to 125. And it is also showing some divergence. Now, I think it's only doing it on 2 out of the 3 indicators. It didn't show it on that last one. This one here, DI plus, is not showing the divergence. Let's take a quick look at this on a weekly chart. Actually, this one doesn't really help me a whole lot. It doesn't really add a whole lot of value to me in terms of what I'm seeing on the weekly chart. Let's take a look at XLF financials. That's the last ETF we'll look at in here. And the financials have been trending up very nicely. This is also mirroring the Dow count that we've got. And here's this last leg. Now, again, I do think this is the third minor wave. And therefore, when this finishes, and it may have finished, when this finishes this third wave, we're going to pull back in a fourth and then go one more time, okay, and complete the wave structure. Let's see, I think we're getting some divergence. Yeah, we are a little bit in this last little leg in here on the demand index, not on the DI plus, and not on RSI. So only 1 out of 3, so not so strong. We may continue to push more on the financials. And one of the banks in the financial index is Bank of America. So it's got similar type picture. It's just mirroring XLF. And of course it should. I mean, it's one of the components. But this is the same type thing. We're in that 5th minute wave up of minor wave 3. So we're looking for 1, 2, 3 to complete. Then 4th, pullback, probably back into this congestion in here around 122, around 22.5, 22. And then one more move up. Let's take a look at the indicators real quick. We are getting some divergence here on demand, on DI plus, and I think this one was just a little bit higher, so not so much on RSI. So 2 out of 3. Interesting when you look at this on a weekly chart. This, let me go to all the trading I've got on Bank of America. It's back to 1980. Here's the big move. Here's the move up to the top, actually into December of 2006. The big financial crisis moved down. Now what this looks like to me is counter trendish. I'm thinking an A, B, C move up. And that would mean that we would have one more move, that when this all breaks down, like when this move breaks, after we finish the 5th move up, it's going to roll over is what I'm expecting. Then we're going to break and we'll have another thrust to the downside. We'll just have to watch and see how the wave counts play out. But pretty dramatic moves in here. And you can see we're not even halfway back to the peak that was up here at, where let's just call it 55, and we were down to $3 in March of or February 2009. And now we're back to 25. So about halfway back, I guess. So that's the picture on Bank of America. Still looking for this 5th wave to complete, just like we're doing and waiting for on the Dow Industrials. So that's the picture for this weekend. Hope you found that helpful. If you did, hit the like button. And if you could think of a person who would benefit from the video, share the video with them. And click on the icon on the screen, get my free ebook to help you stay in the game trading options. Just click that image on the screen and it's a free download. All right, so until next time, stay focused, follow your plan, and trade without fear. Have a great weekend.